Well, New York Times columnist Paul Krugman is calling out CNN for booking economist Stephen Moore, claiming Steve's been, quote, caught many times making factual errors. Now, in a tweet, Krugman blasted CNN for labeling Moore as a, quote, top economist. Of course, you got to remember when Krugman wrote this on the initial election night sell-off after Trump was elected president. If the question is when markets will recover, a first-pass answer is never. Well, they've been up big time, and we have reached out to Mr. Krugman for his comments and his criticism, but he has not responded to us to this point. But let's bring in economist and co-author of Trumponomics, Steve Moore. Steve, it's kind of a badge of honor, isn't it, to be dissed by somebody who got it so wrong?
Yeah, it sort of is. And the history of this is Paul Krugman is still sore at me because we debated out in Las Vegas in front of 3,000 people at Freedom Fest a couple of years ago, and I cleaned his clock, and I don't think he's ever, forgiven me for that. But look, Krugman has a lot of wrong predictions that he's made throughout his life. The guy has a Nobel Prize in economics, which tells you a lot about the people who choose the Nobel Prize. But you were right. He predicted literally moments before the stock market went up 600 points that the stock market would never recover from Trump. He said Trump would cause a second Great Depression. Of course, we've had a booming economy for the last 2 years. You go back to the 80s, by the way, he was the one economist remember when inflation fell under Paul Volcker and Reagan in the early 80s. He was the one who said, no, this is just a temporary blip. We're going to see a continued rise in inflation, and we had low inflation ever since. So he's made a lot of wrong predictions. But the most important thing, David, is he was calling me out he was calling me a liar because I said we have deflation in the economy right now. And I'm going to stick by that, David. If you look at what has happened to commodity prices over the last 6 months, they have fallen precipitously. Not just gold, silver, copper, metals, food, soybeans, everything is falling. And to me, that is a sign of deflation, and it's why the Fed, I think, is wrecking the economy.
By the way, I just got to put it at one point. Gold is up. Gold has been up significantly over the past couple of weeks, just as a kind of a hedge for an emergency, right?
But over the year, it's actually down. I just looked at the CRB numbers. It was down over the year.
All right. Yep.
So, Steve, there are certainly things that are anchoring some of the potential inflation, but where do you stand on the economy? Do you think that we have a strong economy right now, or do you think that we have a broken economy right now?
I think that there's two overhangs on the economy right now that are holding back growth that are big problems. One is the Fed is just reckless. The Fed should be cutting interest rates now, not raising them. There's a big demand for dollars right now as the American economy has been the ideal of the world right now and the envy of the world. And the Fed is pulling back on dollar liquidity at the time it has to put it out there. The second thing, obviously, is the trade situation with China. And I happen to agree with Trump. Now is a good time to be picking a fight with China. They are out of control. They are an enemy of the United States. But until that trade dispute between the two largest economies gets settled, and I think there's a decent chance it will get settled in 2019. I think you're going to continue to see a jittery stock market.
Steve, Jonas Ferris, I'd like to get back to this Krugman spat because I find it so fascinating. I mean, I will say the Paul Krugman articles are very interesting. I think he's a good economist. I think he lets his political feelings sway his economic analysis, which a lot of investors do and make a lot of mistakes, say not investing during the Obama years, for example. But to this specific deflation thing, I think he's being nitpicky about, technically commodities are not inflation. They're maybe a leading indicator, but they're trying to bust you on the CPI not really going down. But more to the question of hypocrisy, because the Krugman I read during the whole Obama years thought we were underdoing stimulus, being too and he was worried about deflation, which you seem to be worried about now. My question is, and this is that they were sort of digging you on, you were also worried about the Fed causing too much inflation back during the Obama years. Why are you both flip-flopping, or am I wrong, neither one of you have flip-flopped?
Okay, it's a good point. I mean, first of all, I do think the best measure of inflation, and what I advocate is for the Fed to fire their 600 economists and just keep the CRB commodity index flat. And if it does that over time, it's in real time, we don't need a Fed. You will have a stable dollar and a stable currency that is a means of exchange, and I don't see anything better than that policy out there. And now, on your point, you're right. I did predict inflation in the early Obama years. And what happened was the Fed was flushing the economy with dollars, but people didn't want them. They were literally stuffing the dollars under their mattress. Now you've got the opposite situation where the Fed is pulling back on dollars at the very time when the world economy wants dollars. And that's why you're getting a stronger dollar and a deflation in asset prices that I think is very counterintuitive, productive. I mean, in the 1930s, I'm not saying we're in the 1930s, but let's not forget, investors should not forget, the 1930s was a period of severe deflation in the economy.
I would agree both of you are right in that deflation is the thing economists need to worry about the most, not inflation. But
yeah, we don't
right
need inflation or deflation.
We don't need
inflation.
We need a stable
inflation.
Steve Forbes taught me that.
By the way, Steve, you were very kind not to mention Dr. Krugman's relationship with Enron back in the day.
Okay, guys.
There's a lot of dirt on that guy.
Yeah.
Okay, let me weigh in right now. This is Christina, Stephen, from in D.C. right now. Christina Partsinevelos. I think the Enron part is a really useless argument, so it's a good thing that he didn't mention it. But you did, and it's on our website as well as Fox News, Steve. You said, I don't see anything to slow it down, alluding to the economy. And now you've just mentioned possibly 2 points, the tightening and interest rates. Yes, I agree with you. This is the first time we have two variables in the economy for quite some time, which could affect growth. But I don't know where you can attribute that growth. Some Democrats may say it has to do with the past. It has to do with Obama. I heard him say that at a rally in Florida. But really, look at the short-term growth. Yes, it's great, but at what expense for long-term growth? Look at the deficit where it is. Look at consumer debt numbers that we saw for October, corporate debt numbers, and obviously I just mentioned government debt. Doesn't that play a factor into all of this, regardless of what Krugman thinks?
Steve Moore, you should mention the fact that the best antidote to deficits is economic growth.
You got that right, Steve Forbes. I learned that from you as well. And, that was what Larry Kudlow and always told Donald Trump. Grow the economy, and so many of these other problems like the debt and the deficit and so on. By the way, the debt as a share of GDP has been stabilized under Trump, not because we've controlled spending, but because we've grown the economy. And so, look, I just think, and I want Steve Forbes, who I just love. I mean, Steve, do you agree with me that we are in a deflationary environment right now when you look at what's happening to the prices of these commodities? I mean, can we defend what the Fed did right before Christmas?
The Fed should, you mentioned a commodity standard. I think you're trying to get around the fact you're advocating a gold standard. Say it,
I knew
Steve.
you would say that.
Come out of the closet.
I like the gold standard, but the only difference that you and I have, Steve, I like using a basket of commodities to measure inflation.
Why not use the best one of them all? Worked for 4,000 years.
Yeah, but that's when all the deflation was when we were on the gold standard.
No,
right?
it was
Steve,
not. That's myth.
Okay, we're getting into the weeds. Steve, thank you so much for coming in. I appreciate it. Best of luck to you.
Happy New Year.